Welcome to Portfolio Africa, a show where we present deal makers, creators, and leaders from the private and public sectors that are working to transform Africa. To share highlights from their work, I am Kemi Oshukoya, the host. FinTech, digital money, and financial inclusion are buzzwords in the international community as well as the financial and technology industries. So it's no surprise that they were part of the agenda discussed at this month's at the four IMF and World Bank meetings. I spoke with two experts about these topics to get a sense of what policymakers and economists are thinking regarding these topics. In the early 2000s, M-Pesa mobile payment services was launched in Kenya as a pilot program to improve microfinance services to loan borrowers to receive and pay loans conveniently. Since then, M-Pesa has become an exemplary financial technology services that can leapfrog financial inclusion in emerging markets and developing countries. Nigeria is among countries exploring the use of fintech. The government sees it as a linchpin for financial inclusion programs. I caught up with the deputy governor in charge of financial system stability at the Central Bank of Nigeria, Ms. Aishah Ahmad, during the IMF meetings to find out how the bank and the government plan to improve financial inclusion in Nigeria. What is the central bank doing? Why are you interested in fintech?
I think everyone is interested in fintech, particularly this topic, because of what it can do for financial inclusion, how it can help you improve your financial inclusion statistics.
Okay, especially Nigeria.
Yes.
Let's talk about Nigeria.
Yes.
And in terms of financial inclusion.
Yes, we made a lot of progress. We're now at about 63.2% inclusion. We want to get to 80% by next year. And of course, that means that for those that are excluded, we're looking at how digital financial services can help bring more people in.
Okay.
Nigeria is one of the countries that were mentioned as, the showcase for what digital financial services can do for the country.
Okay. The government has employed digital technology as a way to jumpstart a lot of programs in Nigeria, for example. And as the central bank, there has been in terms of currency. But are you also looking into cryptocurrency?
I think for now we're focused on making sure that all the Nigerians that don't have access to financial services get that access. We're focused on ensuring that our financial system is stable and inclusive, and we're focused on ensuring that all of the different players that keep coming in, which are of course supporting financial inclusion, have the appropriate regulation and supervision to enable the whole system to thrive. That's our focus.
Okay. So what programs are you looking into?
We're looking at the entire ecosystem, making sure that policy is clear, making sure that we give an enabling environment in terms of infrastructure, and making sure that there's consumer protection within that, and that there are no biases in terms of making sure that credit is accessible to most SMEs, if not all.
Especially women.
Especially youth. That's what inclusion is about. Women and youth and all those companies.
So they will be able to become more integrated into the global market.
Exactly.
Okay. What role can technology play in expanding financial inclusion, especially in emerging markets and developing countries? And how can governments employ the best practices to ensure fintech and digital money serve their population suitably? For answers, I spoke with Sonja Davidovic, economics and digital advisor at the IMF during the IMF World Bank meeting in October. You just talk about cryptocurrency, and There is a lot of developing economies that are looking into using that. They are very interested in digital currency. And they see it as a vehicle to foster financial inclusion. What do you think about that?
I think that it's important to recognize the role that technology can play to expand financial inclusion to all citizens. There's certainly solutions out there that can really help achieve and drive that goal. And certainly stablecoins, crypto assets that are designed to be stable in value relative to another asset, can help out because transacting in stablecoins, meaning sending them abroad, like in form of remittances that your friends or family may send to you, can be near costless and immediate, meaning that people won't have to incur high fees for a bank transfer, let's say, to wire money to friends and family, but can do so in a much more cost-efficient manner.
Okay, as you mentioned, I think that's one of the reasons why, especially African, where fintech has taken off. I think that's one of the reasons why the governments are very interested in that. But at the same time, there are a very major concern that it can be used for terrorism, it can be used for other money laundering. What is your view about that?
Now, of course, every technological solution has to be compliant with financial integrity standards. And as much as technology has an opportunity, it also introduces risks. So at the IMF, we believe that any solution that is developed or any company that tries to develop such a solution should comply with the pertinent regulation that is out there and comply with financial integrity standards and alleviate financial stability concerns. That is very important because it has to protect consumers and investors alike. It has to ensure that no money is being laundered or or there's no terrorist financing. Those are really, really important considerations. The same goes for protecting your data, right? It's important that there are robust privacy laws and that any technological solutions that is developed complies with those laws. So yes, as much as technology offers innovative solutions for financial inclusion, it also introduces risks, and it's just important to balance those benefits against the risk.
Okay, let's talk about women. For example, we mentioned financial inclusion. In emerging market, developing economy, women essentially, in some cases, have been excluded from the major bank. And in terms of getting loans, do you see this helping the digital currency, helping small business enterprise to be more inclusive in the markets?
Oh yes, I certainly see an opportunity there as well. Like a lot of times people, and especially minorities, including women, are unable to be part of the official financial sector because they either lack identification, it's very expensive for them to get a bank loan out, they don't have a credit history that banks always require when they make out a loan to citizens and women in particularly. So I think that technology, including microloans or peer-to-peer lending and other forms that have developed in sub-Saharan Africa, and Kenya is a good example of that, have really have the potential to offer alternative ways to find financing. Of course, it's just important to understand that the sheer availability of these microloans or any fintech-enabled loans might lead to people over-indebting themselves, and that's a major concern that public institutions like government should try to take care of by raising awareness about financial literacy and raising awareness of like the potential dangers and risk related to like loans being available more broadly and widely to the population, including women.
So you're talking about predatory rates?
Yes, predatory rates, but also people being aware of the danger of having multiple small loans, not overextending themselves into loans, being able to service those loans and any interest that are being incurred on those loans. So I think it's just more just being financially literate, being aware of what is my role and what is my responsibility when I take out a loan from a microfinance institution or I borrow from my peers. So being fully aware what responsibilities I take on when I receive a loan like this one. And I think this is where government can play a very active role in educating citizens, starting maybe even in early childhood. What does it mean to be financially responsible? And same thing goes for digital literacy, right? How do I use my cell phone? What is the data that I'm putting out there? How is that data being used? And in what ways can I protect myself from predators, or in what ways can I act responsibly?
Okay. For my last question to you is, governments in Africa looking into this. What advice do you have for them?
I think there's no universal silver bullet that can be used. Every country is different, and every country has their own issues they're dealing with. So it's important to keep that in mind when issuing recommendations. But what I can say is that governments should explore the potential that technology can bring, but also keep in mind the risks that are associated. And regulation may not always be up to date, so it's important to have flexible arrangements like innovation hubs or regulatory sandbox, where some of these solutions that are out there can be tested out, so that regulators can be informed about what potential implications such a technological solutions can have for the investors, for the consumers, maybe even for monetary policy. It's a controlled environment where these things can be tested out. So I think this would be a good way to make sure that these risks are identified early and addressed, working together with private sector companies that are offering these solutions.
Okay, thank you very much.
You're welcome.